Good afternoon, morning, night, wherever you are. It's Jeff Dorman, Chief Investment Officer at Arca, bringing you live at R2 Satoshis Twitter Live here. I'm joined by my esteemed colleague, Nick Hotz, who is going to talk about some of the sections we wrote about this week. But it's pouring here in Los Angeles. I got hit in the face by a baseball at my 9-year-old's baseball tournament this weekend. So weird things going on here, but the market is climbing higher. So we'll talk about it today. A couple things we wrote about this week, and of course, everybody can get this on our blog at ar.ca. We basically talked about 3 different topics today about the market. We're going to start with Nick's piece. We'll go down to the bottom of this section here. We'll start with what Nick wrote about. So, Nick, how you doing today, man?
I'm good.
Where are you calling in from? New Haven, Connecticut?
I am, yeah, and it's actually beautiful weather here. So I don't know what you guys have over there.
Nice, yeah, it is monsoon here. So let me ask you a question, Nick. You somehow wrote the first ever digital asset blog about the Wu-Tang Clan. What's going on there? Why and how is this interesting?
Yeah, so I had seen this story years ago. I thought it was really interesting. So the Wu-Tang Clan is this hip hop group that they had been popular for decades, I think, beforehand.
I'm an old man. I'm familiar with Wu-Tang Clan.
Sure. But their final album was supposed to be this unique thing where they only released one of them, and they said, you can't copy this, you can't use it commercially. And they just sold this one copy and ended up going to this guy, Martin Shkreli, who's this kind of not so well liked ex hedge fund manager. He's now in jail for securities fraud. But so once he went to jail, it got sold back to or reclaimed by the government, and this DAO called Pleaser DAO ended up buying it. And so Pleaser DAO is a decentralized autonomous organization. And so it's basically a group of people who met and communicate on the internet. They interact like financially on the internet as well. And they collect NFTs, non-fungible tokens of kind of culturally significant things in the crypto space, kind of meme things like the original Doge NFT and meme. They own that, some other things as well.
Look at the website they have over at Pleaser DAO. I encourage people to
it is cool, yeah.
Job well done by them.
Anyway, so yeah, I just thought it was kind of interesting. Shkreli was kind of notoriously really stingy with the album. Wouldn't really share it with anybody, so really almost nobody had listened to it. But when Pleaser DAO bought it, they were saying that they were going to try to distribute it kind of as well as they could to the public, and that got me thinking a bit about how the digital asset ecosystem and technology can be used for kind of democratization of various public goods in society that normally people necessarily don't have access to.
Well, you're hitting on something pretty interesting here, right? So for those not familiar, Web 3.0, the whole idea of Web 3.0 is simply everything that the internet solved for, in terms of communication and applications, whether it's the connectivity from a Google or a Facebook or a Netflix. All of the value here ultimately accrued to the middleman, right? Facebook accrued all the value, Google accrued all the value, Netflix, Amazon, et cetera. The idea of Web 3.0 is that we can recreate all of these same exact platforms, but the users themselves and the contributors who make these powerful platforms work are the ones who are going to retain the value. So what I thought was really interesting about what you wrote, Nick, was effectively you said the album that Wu-Tang Clan put out, which was essentially supposed to be a shot at the way the music industry had historically worked, where the music industry itself took all of the fees and all of the value, and the artists got nothing and the consumers got nothing. They basically said, we're going to spit in your face and just release an album one of one, and sell it to one person, and nobody gets to listen to it. And ironically, 7-8 years later, this was in 2015. So now 6-7 years later, ironically, blockchain technology is actually solving for that very problem, where now you can have the NFT representation of this, but you can fractionalize it and you can give it to hundreds or thousands of people around the world. And ultimately, the fans and the band themselves can retain that value, and you completely usurp that middleman. So, maybe they were ahead of their time. Maybe it was just good luck, but it's pretty interesting how this has come full circle.
Yeah, and you see that, in the music industry, that was a really big theme over the past, 5-10 years, ever since especially Spotify got into the game. If you're a big artist, you can definitely make it on Spotify, but if you're kind of medium to small, it really puts the pressure on you because you're not selling directly to your audience anymore. You don't have that communication factor with your audience. But you mentioned fractionalization. That's a huge point. I talked about things like Justin Blau is doing with Royal, being able to kind of source the cash flows that your music accrues to your fans instead of to a record label, and being able to kind of work much more closely with your fans and create a real community and an economy around your music and around your kind of brand, I think is going to hugely change that whole industry.
So what happens next with Pleaser DAO now? They bought the actual album itself. What do you think happens here? What are they going to do with it?
Yeah, I didn't go into reading the whole legal contract and everything because there are some weird stipulations. There's like if any of the members of the Wu-Tang Clan or Bill Murray steals it, then they can release it to the public, or I don't know, weird stuff. But I think that this is embodying kind of the spirit of what the Wu-Tang Clan put out the album for. So I think they're trying to get in communication with RZA, who's the kind of the head kind of who produced that album. And I think they're probably going to try to end up fractionalizing it in some way. Maybe that's, making 1,000 different copies or 1,000,000 different tokens and saying, if you own a whole token, you can come and listen to it at, X venue in the US or throughout the world, or some other way of doing that kind of facilitates a broader community being able to access it.
Yeah, and I think I think what's interesting here is if you look across the Web 3.0, Web 3.0 was up roughly 7% last week, according to the data that we sourced from Asari, up about 409% year to date as a sector, which trails DeFi, it trails NFTs, but certainly trails smart contract platforms with the rise of Luna and Solana and some others. But definitely outperforming Bitcoin, outperforming Ethereum itself. So definitely a lot of interest in Web 3.0. It certainly extends beyond just the music industry as well, right? We've seen platforms like Rally, focus on basically connecting celebrities directly with their fans. We've seen sites like Socios and the Chili's blockchain, which is directly connecting fans to their favorite sports teams. We've also seen games like Axie Infinity that are starting to create ecosystems where the users and the developers and everybody are making the money and not necessarily just the game itself. So, we're seeing Web 3.0 as a very broad category. And then within it, you're seeing individual subsectors of Web 3.0 that are starting to have some, not just great performance by the underlying tokens, but also real traction and real adoption of these platforms from the users themselves. So pretty exciting to see. Curious, any other thoughts with regard to why this is interesting to you today, or why this Rolling Stone article grabbed your eye today, and where you're seeing sort of the future of some of these things?
Yeah, I mean, it's funny just on that Web3 point. I find that I'm equally excited about all of this stuff, but when I try to explain why I'm so excited about it to other normal people, it's always the Web3 applications that really, I think, are able to connect through things like Axie, things like Rally, things like Helium. The ones that have physical applications that people can, tangibly use and feel, that aren't just kind of moving money around necessarily, are, I think, really good at penetrating kind of the mainstream consciousness. And that's part of why I was really excited about this. On the album component, yeah, I mean, I'm just really curious to see what they end up doing with it. With the Doge NFT, they ended up fractionalizing it, and so you can have, I think they have tens of thousands or hundreds of thousands people holding a piece of that original NFT, which I thought was really cool. And I think when you talk about a physical item that actually embodies this kind of, you can actually listen to the music rather than not being able to interact with the Doge meme necessarily. You start to get a lot more interesting use cases, and I think it previews some very interesting things coming up in the future.
For sure. And a shout out to one of our favorites, Sushi Swap, who was their Miso platform that allowed for the fractionalization of the Doge NFT. So certainly it'd be interesting to see what Pleaser DAO does with this Wu-Tang album. So I appreciate it, Nick. Let's move on to a couple things, and Nick, stick with me for a little bit. Always curious your thoughts on this stuff. Other things we talked about this week. Obviously, the Bitcoin ETF was a huge a storyline, finally getting approved after years of applications. What's interesting is everyone's attributing the rise in Bitcoin this month, up almost 40% month to date, with the finality of the approval of the Bitcoin ETF. Honestly, I'm not sure that that was really the case, though, because when you actually look at what's going on around the rest of the ecosystem, it's been a pretty clean sweep for risk assets this month. You have U.S. equities setting all-time highs again. Was for what seems like almost every day we set a new all-time high. The VIX has retreated to a 6-month low, back down to where we were pre-pandemic. The entire U.S. Treasury curve is selling off. Basically we are at all-time highs for just about everything, while the Fed is saying, no, it's okay. No need to raise interest rates here. We'll just hold them at zero because we want to continue to boost asset prices and there is no inflation. So if you actually track the guys at New York Dig had put a pretty interesting chart out this week, which we put into two Satoshis, talking about the 5-year break-even yields and how correlated that's been to Bitcoin over the last month and a half here. So there is an argument. Of course, you never really know in the moment, but there is an argument here that the rise in Bitcoin and the rise of other digital assets, along with equities and other risk assets, is really more based on the rising expectations of a Fed rate hike by the end of 2022, and ultimately the inflation that's seeping in the system. So we'll see what happens here. Obviously, the Bitcoin ETF is incredibly positive, but I think we saw a little bit of a buy the rumor, sell the news last week as we approached 67,000 on Bitcoin and then came right back down to 60. I think the ETF is probably a short-lived piece of news, whereas this rising inflation expectations are a little more long-lasting. Nick, you come from a macro background. What are your thoughts here on inflation? I know you got a lot.
Yeah, I had looked at the kind of correlations of Bitcoin to inflation in the past, and that part of the reason I thought that NYDIG chart was so interesting was because in the past it really hadn't been all that correlated. Actually growth was a lot more correlated, U.S. growth, to Bitcoin prices than inflation was, and so to see that kind of closely tied nature to break evens, which is kind of the market implied inflation measure, that really, I think, validates a lot of the Bitcoin narrative that people have been propagating over the past few years. We'll see how long that lasts. I mean, Bitcoin's been correlated to the S&P at certain times and gold at certain times, and that kind of fades in and out. But yeah, I mean, it certainly is interesting now, and especially when inflation is higher than it's been in recent memory.
Yeah, for sure. Well, we'll see. I think markets generally get this kind of stuff right, if not because it's obvious, but also because the government tends to leak this stuff pretty quickly to the big banks and broker dealers and economists. The market's now pricing in basically a 95% chance of rate hikes in 2022. I think that's probably pretty inevitable at this point, barring anything else. Lastly, we'll just touch on the other big story of the week, which maybe a lot of people glossed over, but Mt. Gox, the old trading card platform, which became the biggest Bitcoin exchange back in the early days of Bitcoin back in 2010, 2011, 2012. Mt. Gox filed for bankruptcy in 2014 and actually went to a Japanese bankruptcy court. For us credit and distress nerds, this is actually a really interesting story. Maybe not so for other people, but Mt. Gox finally, after 7 years now, had their bankruptcy plan approved. For those not familiar with the bankruptcy process, it's a lot of back and forth, and ultimately the lawyers get a lot of fees. So they're in no hurry to move a rehabilitation plan forward until it's crystal clear. But they finally got to a vote. 99% of the creditors voted in favor, and we're going to start seeing some cash and Bitcoin on the move. So for some quick math here, the people who lost Bitcoin in the Mt. Gox hack of 2014 are ultimately only getting 21% of what they put in back. So while that sounds horrible from a recovery value, you're losing 79% of the value. During that time, obviously, Bitcoin went up from $300 to now 62,000 and change. So basically a 40x win for everybody who lost 80% of their Bitcoin. So what that means today is starting in November, you're going to start seeing this money being distributed. About $1.7 billion in cash is going to be distributed, along with about $9 billion worth of Bitcoin and about $1 billion worth of Bitcoin cash. So the exact numbers are 142,000 Bitcoin and 143,000 Bitcoin cash. So it's going to be a pretty big win for those who have been waiting this long. From my standpoint, what I think is most interesting is I think around November 20th, you're going to have a lot of people starting to question, what's going to happen with all this Bitcoin that comes back into the market? Are people going to sell it? I actually think there's two things that the market is already missing and is probably going to continue to miss. The first of which is that Fortress, one of the biggest distress firms out there, has been the biggest buyer of distress claims of Mt. Gox. And they probably own well over half of that $9 billion worth of Bitcoin that's coming back. They've probably already hedged most of it through selling forwards and futures. But also, if you remember going back a year and a half ago when the US government actually seized and ended up auctioning off a lot of Bitcoin, there was a lot of traditional players who decided to buy that Bitcoin from the auction because they didn't want to sign up with exchanges. They didn't want to use OTC desks. They wanted it to be a clean transaction direct from the government. I have a feeling you're going to see the same thing happen here with Bitcoin, which is there's going to be a lot of traditional funds and players out there who might want to own $1 billion or $2 billion of Bitcoin, but don't want that leaked through Coinbase or New York Dig or Galaxy, and they're going to go bid Fortress directly for that Bitcoin. So I think there's a good chance that Bitcoin ends up in safe hands and you never see it. The second thing I think people are missing is the $1.7 billion in cash is much more impactful than the $9 billion of Bitcoin that's coming back. Yeah, don't forget the people who lost money in Mt. Gox. Bitcoin was the only game in town back in 2013. Now there's NFTs, there's gaming, sports, Web 3.0, DeFi, CeFi, etc. I think that $1.7 billion gets poured immediately back into the market and probably not into Bitcoin. This is going to be people who have been waiting to get a cash distribution and are going to pour it into new and different assets. So I think there's a good chance that this is actually an incredibly bullish outcome for the market. Curious, what do you think, Nick?
Yeah, I guess I just thought about the kind of plus token Ponzi scheme back in 2019 when they had the kind of I think it was like 1.5 billion of Bitcoin that had gotten stolen from people, and then they were just market dumping it the whole time, and that was potentially caused a bear market back then. But the difference between now and then is night and day, right? Like how deep the markets are. I mean, just the market capitalization now, liquidity and everything.
You can definitely absorb this selling pressure much more.
Yeah.
I also would say that the difference between this and Plus Token was most people didn't know the Plus Token sales were happening until after the fact. So you had a real negative tone in the market from just this constant selling without anybody knowing where it's coming from. Whereas this Mt. Gox situation is incredibly well telegraphed. And for years, creditors had a chance to hedge out and pre-sell some of that risk. So definitely think it's going to be a little bit different than Plus Token, but we'll see. When $9 billion comes onto the market, you never know what's going to happen. I would say Bitcoin Cash investors, if any of those still exist, I think they're probably the ones that would be more at risk here, given that the fork happened after the Mt. Gox bankruptcy, which means that absolutely none of the people who are getting this Bitcoin Cash really wanted it to begin with. They're just getting it. So my guess is all of the Bitcoin Cash gets dumped on the market. We'll see about Bitcoin itself.
Agreed, and I think that the actual cash on the sidelines is a more impactful factor as well.
Well, we'll see. Circle that in your calendars, everyone, November 20th. Anyway, Nick, thanks for joining us today on That's Our Two Satoshis Live. For those who want to read the actual article, it's again on our website at ar.ca. Go to the blog section. Thanks for joining us, and we'll see you next week.
Thanks, Jeff.